Good evening, everyone. I'm Sai Nair on behalf of Kirin Advisors. It's a pleasure to welcome you all to Beyond the Numbers Value Discovery Summit 2025, powered by Value Educator and co-powered by Kirin Advisors. This is the ninth interaction of day two, and we are pleased to have Praveg Limited. From the management side of the team, we have Dr. Vishnu Kumar Patel, the chairman, Mr. Mukesh Chaudhary, company secretary and compliance officer, Mr. Yeah. So, from the Value Educator team, we have ourselves with Miss Swarangi Mole. With that, now I would like to hand over the floor to Swarangi ma'am. Over to you, ma'am.
Thank you for the quick introduction. So, before we start, a quick background on Praveg Communication is an integrated advertising, events, and marketing company with core expertise in exhibitions and event management. The company today operates across two major verticals: its tourism and hospitality division focuses on eco-responsible luxury resorts in culturally significant locations across India, while its exhibitions and events businesses specializes in creating large format world-class event structures in delivering high-impact exhibitions, corporate events, and engagements. So, with that, I hand over to Mr. Mohan sir. Over to you, sir.
Thank you.
Mukesh, yeah.
Good evening, ladies and gentlemen. My name is Mukesh Chaudhary. I'm the Company Secretary and Compliance Officer of the Praveg Limited. Thank you to all for joining us today at the Beyond the Numbers Value Discovery Summit. We truly appreciate your time and continued interest in our journey. Thank you for taking the time to be with us today. Who we are. Praveg is not just a hospitality company. We are a destination creator and experience curator and a first mover in asset light, high return hospitality development. Today, Praveg operates 18 eco resorts across India, strategically located in some of country's most iconic spiritual, heritage, wildlife, coastal, and leisure destinations like Ayodhya, Varanasi, Dholavira, Velavadar, Diu, Daman, Silvassa, Ahmedabad, and more. With five new resorts already in pipeline, including high potential destinations such as Lakshadweep, Kihim Beach, Javai, and Adalaj, which we recently operational started. Our growth trajectory remains robust, disciplined, and opportunity driven. Leadership and vision. At the heart of Praveg is our chairman, sir, Dr. Vishnu Kumar V. Patel, a chartered accountant, entrepreneur, and visionary leader with over 30 years of cross-sector experience, spanning finance, energy, real estate, hospitality, and infrastructure. Under his leadership, Praveg and its group companies have built a strong, diversified enterprise, supported by a workforce of over 2,000 professionals and a proven track record of successfully executing large complex projects across sectors. Dr. Patel's philosophy is simple yet powerful: ethical governance, analytical decision making, rapid execution, and sustainable value creation. Our growth journey Praveg's evolution has deliberate and milestone driven. We begin with events, exhibitions, and national level tourism projects. Expanded into hospitality, luxury tents hospitality with White Run Resort, successfully listed on stock exchange BSC Limited, scaled rapidly across tent cities, beach resorts, safari lodges, and urban luxury hotels. Achieved five-star accreditation for Grand Elogia, Ahmedabad. Entered into strategic partnership with IHCL Tata Group Mahindra Holidays, Ginger Hotels, and LJS. Each phase reflects disciplined expansion backed by operating cash flows and institutional partnerships. Our core strength is speed with profitability. What truly differentiates Praveg is execution velocity. While traditional hospitality projects takes 24 to 36 months, Praveg develops and operationalizes projects in just 6 to 12 months. This translates into faster revenue generation, higher return on capital employed, lower project risk, shorter payback cycles. Simple put, we monetize time better than anyone else in the industry. Diverse hospitality portfolio. Our portfolio is intentionally diversified across three construction models. First, permanent assets, long-term, high-value properties such as Grand Ilugia Ahmedabad, Praveg Caves Javai, Dholavira Triangle Cottages, Velavadar Safari Resorts. These anchor our balance sheet with enduring infrastructure and premium positioning. Second, semi-permanent resorts. Eco-sensitive, scalable assets including Lakshadweep, Bangaram and Thinakara, beach resorts in Diu and Daman, Tent City Narmada, Tent City Ayodhya. They combine sustainability with year-round operations. Third category is tented pop-up hospitality, iconic festival-driven destinations such as White Run Resort, Dhordo, Tent City, Ayodhya, Brahmakund. These generate exceptional margins during peak tourism cycle. Operational excellence and brand trust. Praveg today operates 17 plus resorts and hotels, supported by in-house architectural and design studio, centralized procurement, dedicated digital marketing and branding teams, SOP-driven operations, and guest experience management. Our focus on 100% guest satisfaction has resulted in high repeat revisitation, strong brand recall, consistent occupancy across locations. We are also a trusted host to state and national delegates, having hosted the Honorable Prime Minister of India, Honorable Chief Minister of Gujarat, and senior constitutional authorities. Awards and industry recognition. Our work has consistently recognized, including Asia's biggest tourism award, multiple categories in 2024, Best MICE venue in Gujarat, Best wedding venue in Ahmedabad, Best boutique safari resort. Ministry of Tourism recognizes for deluxe and five-star properties. These accolades validate both our exhibition capability and brand credentials. Flexible, investor-friendly business models. Praveg offers three clear investment engagement models. First, design, development, and operations by Praveg. Second, lease-based model, fixed lease, revenue share, and hybrid. Third, management control model, asset light for owners, full operational control by Praveg. Each model is designed to de-risk investors, ensure transparency, and optimize returns. Financial discipline and return. Across India and emerging Africa markets, our projects typically deliver EBITDA margin of 20 to 30%, IRR of 15 to 18%, payback period of 6 to 7 years, long-term agreements of 30 years and beyond. This is hospitality with predictable cash flows and scalable economics. Global ambition. With India's tourism economy projected to exceed more than $168 billion by 2030, and similar tailwind emerging in Africa's experimental and safari tourism, Praveg is strategically positioned for international expansion. Our Africa roadmap includes Kenya and Tanzania safari lodges, Zanzibar Iceland treatment, small format, high margin luxury resorts. In closing, Praveg stands at the intersection of tourism growth, infrastructure expansion, experimental travel demand, capital efficient development. We are not chasing scale for the sake of scale. We are building profitable, resilient, and future ready hospitality assets. Thank you for your trust. We are looking to building the next phase of growth together.
Okay, so can we start with the Q&A session, sir?
Yes.
Okay. So, dear participants, the floor is now open for Q&A session. If you have any questions, kindly raise your hand. I'll allow you to unmute and you can ask the questions. You can also write down your questions in the chat box. Yes, Mr. Madhur, you can go ahead and ask your questions.
Sir, thank you for the opportunity. Sir, I'm relatively new to the company, sir. So, wanted to understand how do we bid for the project, sir? Are these the lowest cost project, lowest cost winner gets the project, or how do we get these projects?
There is multiple dimension. Uh, Thank you, Madhur. There is multiple dimension. When we are talking about hospitality, land acquisition, or the place acquisition, in that case, those who offer high royalty or lease rent, they awarded particular area of lease. When we are talking about exhibition, event management, and advertising work, then the lowest L1 get the award of the projects. These are two different area where Praveg is working.
Right. So I was trying to understand, sir, when we say that the royalty or the rental portion is a decent, so we operate these tents and lease operated hotels. So still, sir, why is our IRR only 15 to 18%? Because and payback 6 to 7 years, I would have expected this to be much faster than this, because we are just setting up tents and all. So if you could just help us understand on that front.
It's not about only a tent. We have multiple structure which we are using. There is also a tent, one of the part. Out of this 17 resort, you may find a 5 or 4 project is made up with the tent. Another is a permanent, semi-permanent structure, kind of structure we are using. So it's a vary from per room cost starting from 20 lakh to reach to a 75 lakh for semi-permanent structure. And for permanent hotels, like the structure cost may reach to around 1 crore rupees. So IR is always depend upon the business metrics as well as the cost of the components we are using for the development of a particular tent city or the hospitality projects. While deriving to the exact figure of each hotels, we are giving a composite figure that it may reach up to payback period of 7 years. Some project are delivering 3 years of the payback period. Some project is 4, some is 5. So the product mix is like this.
Right. And sir, what would be the average contract life or the remaining whatever timeline that we have for these leased assets? And sir,
It,
yeah, sorry, sir.
is starting from 5 years to 30 years and even 35 years, and even permanent land upon which we are building the resorts like Dholavira, Velavadar, and these Javite caves. So it's depend. But it's always be a renewable. Sometime it's not renewable, subject to retendering. And while retendering, it's an opportunity to the first mover advantage to the Praveg. That's why where we have built already capital expenditure and everything. And when renewals time, we have added advantage to bid some aggressive price and take the particular location if we find a good feasibility historically, and we have good experience and we have good business from that location. Based upon that experience, we derived the best optimum metrics in terms of lease pricing. And normally, the newcomer bid the lease is less than whatever we bid. You can see our trend also of retendering acquisition of past some tendency also. Thank you.
Right. Sir, just a final two, three questions from mine and I'll get back in with you. Sir, I read it that we do 30 to 40% of our revenue in H1 and the remaining in H2. So is it fair to assume that we could be doing close to 250 crore revenue for FY26?
That you may assume.
Okay. And sir, at what levels of revenue, sir, because I understand that we have doubled our capacity from 180 crores to closer to 380 crores in the past 18 odd months. What
Yeah.
level of revenue would we require to us to achieve the 25% EBITDA margin levels on a quarterly basis, if you could help?
So it's a product mix for the Praveg. When we are discussing about advertising and branding company, that is Avik, that EBITDA margin is normally vary from 20% to 25%. When we are talking about hospitality, so it's depend upon the particular hospitality resorts. Some resorts we have inaugurated newly in the last 1 or 1.5 years. In that case, we need a time to make it more popular by way of various means like branding, social media, and local tourism, travel expo, as well as other marketing opportunity we are utilizing, and slowly we are graduating upward revenue from particular various resorts. So we need to have some time from 1 to 2 years or 3 years to make it popularize. So it's always depend upon the how much older the resort is. So the product mix of all the resorts will lead to the decision of this EBITDA margin. That may vary. If the very new, in may case sometimes it's a neutral EBITDA, but when there is a old resorts which is more popular, we get more business in terms of weddings, in terms of conference like that. In that case, we may reach to 50% EBITDA margin. So from 0 to 50. But when the 17 resort we are discussing, the average product mix is, as you know, the Praveg has newly started all these 15 resorts in last 1 or 2 years. In that case, you may assume 20% to something plus minus 10%, depends upon the market response.
Right. And sir, as this scales up, can we expect it to be upwards of 30-35% when these 15 new resorts that we have opened stabilizes maybe over the next 1.5 years?
I couldn't understand you. Again,
Sir,
please.
so our the margin profile is currently similar to what 20% plus minus 10% for the hospitality portion currently. Sir, so I'm trying to understand that when these resorts scale up or stabilizes or get matured, will that margin profile move to 30
Yeah,
35%?
it may reach to 50% up to.
Okay, got it. Sir,
But,
thank you so
but
much.
but as a prudent investor, you need to have some give to your company some more time, and because of out of these 17 18 resorts, around 50 more than 50% resort are 1 or 1.5 years average period of operation. And
Okay.
also you have to understand the Praveg is not only the room rent is on depend upon room and room revenue. We have weddings venue like Adalaj where there is no room, only 10 room is there. It's for wedding purpose. We need some rooms. That's why we built there. But basic revenue is from the wedding activity. So this year we have launched it in October month. So we need to have शादियों में हमेशा लोग प्लानिंग करते हैं 6 महीना 12 महीना पहले दे normally come to book. So this year we will book for the next wedding season, and the revenue from the room is almost it's a zero, but 10 to 20 crore revenue is from the wedding opportunity over there. Same way in Kachigam, the room revenue is normal, but we have booked around 15 wedding this year. So all that revenue make always possible in the second half only. So first and second half always you have find a difference. So far as Praveg hospitality is concerned, it is always a seasonal variation you have to taken into account. So far as advertising in concern, normally it's flat, but it also has to it give more business. We get more business in advertising and branding business also. Same way when you are talking about event exhibition, we get a good business in third and fourth quarter. Same way some first quarter also we get a good business. In second quarter there may be some not exciting inquiry in the event and exhibition foray. Same way when you are talking about the Praveg has launched various investor model whereby Praveg are building hotels for others. In that case, there is not any such a variation in all this quarter four. All quarter is almost same because we have to build a resorts for others. When we are talking about investor where we build as well as operate, in that case, so far as revenue of building is concerned, construction development of the resort is concerned, we get equalize business in all four quarter. So companies seriously working to reduce the seasonal variation, but ultimately you have to take into account their hospitality is always on third and fourth in India. So far as weather and all the concern we have to take into account. In that case, first quarter will be good average. Third and fourth will be blossom. So we have to take into account. And the Praveg is working in four dimension. So all dimension revenue is highly depend upon which segment is giving good business to the company's books. It's depend in overall market scenario also.
Got it. Sir, just a final question from my end. Sir, what is the average lease that we pay or rental that we need to pay every year with all these the 18 resorts that we have and the 5 that are in pipeline? What will be the average lease payout for us every on a yearly basis?
It's not like that. Average lease of all say 70 resort is we have not evenly calculated, but you can say it's maybe 2 to 3 crore in between average.
Sir, this is for the all the the ones that we have taken on lease and the ones that will be coming on, right?
Yeah, exactly.
Okay.
So,
Thank you,
so
Doctor.
it's not actually particular answer from my side. It's a depend upon the location and various property. Some lease are starting from 50 lakh rupees per resort. Some lease is 9.5 crore. So it's very difficult to give you
Sir,
this.
I'm trying to understand on an overall basis, sir. So I'm trying to understand for Praveg, what will be the lease outgo or the rental outgo on an overall basis for FY26 or FY27 on an
So,
overall basis
Um,
combined.
Madhur, it is very percentage term will also mislead us because when the revenue, total revenue is high, in that case, the percentage of lease revenue will be reduced. But so far as seasonal variation is concerned, especially second quarter, where the total revenue is less, where while lease revenue is fixed, so it's hit to the books. So bottom line always depleted by the lease payment. But when the same way third and fourth quarter is coming and same way 25, 6, sorry, 6, 7, 7, 27, 28, when the revenue will grow, the lease is same. So that lead to EBITDA margin, incremental EBITDA margin from 20% to 30, 40, 50, it's depend.
Sir, what
How,
would be
how?
the actual amount, sir? I'm trying to understand what would be the actual
3
amount
crore.
that we
3
are
crore.
paying.
Average,
3
average
crore
2
on the
to
overall
3.
basis.
Average 2 to 3 crore per resort you may
Okay, 2
calculate.
to 3 crore per resort. Okay. Thank you, Dr. Patel, for answering my questions and all the best.
Thank you. Next,
Yeah,
Sangi.
Mr. Deepak, you can go ahead and ask your questions.
Yes, hi. Thanks for an opportunity. Sir, two questions from my side. First is on the current room set, what is the occupancy that we are getting overall on blended basis?
Deepak, already I described in earlier this Mr. Rathi answer. The Praveg is not only is contributing revenue from the room. We have right now, including seasonal rooms, it's come to around 850 rooms. Apart from that, soon we are launching to the Lakshdeep. So that 100 room will be added as well as we have already acquired Kutch 252 bed. Approximately it can be counted average 126 room that will be added in this year to come. So total 226 room when we add, it's come to be around 1150 or something. plus a new development which is going on at presently.
And sir, on this 850 rooms that you are already operating, what is the occupancy there?
You may presume occupancy of around 50% because we account seasonal variation. I am talking about average year, entire year occupancy. That's 45 to 55% average occupancy. Some resort is contributing 70%. Some project is contributing 20%, 25% minimum. Because when the project is resort is launched new, in that case we need the time to market it. So it's slowly growing up.
Got it. This number is for H1 FY26, right, sir? 45 to 50%.
H1, no. I'm talking about yearly.
Okay. For the whole
But
year,
there
it
is
will
a
be.
conference income, there is a way.
Hello. I think Vishnu sir has some connectivity issues. We'll wait for some time until he joins.
Yes, I think.
Deepak, kindly go ahead.
Yes.
What was last point I forget?
Yeah, you were saying 45 to 50% occupancy for the whole year.
Yeah. So it's depend upon product mix, how we, yes, exactly. I understand.
I request all the participants to wait until the management joins. Hello. Vishnu sir,
I
it would be okay if you turn off your video. It would help, sir.
Oh, yeah. Okay.
Yeah.
So so event business was compromised in last 2 years. Now we are again going to recapture it. We have built up team last quarter 2, and now we are getting good business. You can see on our exchange filing also that Sardar Yatra 150 years starting from Karamshat to Kevadia done by the Praveg. It was huge business. It is a mass media business. Mass event was there. It is being inaugurated by the CM as PM of the Honorable Prime Minister, and that concluded by the Vice President of India. Hello, are you listening?
Yes, sir, you are
Yes,
audible.
sir.
Yeah. So that event, it is on very larger scale, and we got a work order for the same. It is huge, and this will give revenue in this quarter that you will going to understand.
Got it, sir.
So,
Largely,
so,
we'll be
so
having
my team is
1100 odd rooms.
so my team is focusing on event exhibition right now. So third area, which is compromise, which is leading cost to the company's balance sheet every years, because my team was underutilized due to event exhibition business, and now we have built that team. So you find the bottom line also improved by that way. Thank you.
Okay, sir, 1100 rooms for FY27. That is the number that we will be going through, right? At the beginning of FY27?
No, no, no. Yeah, it is going to add every time, every year, because of hotels development is going on in Lakshadweep 3 also, as well as some other development are under progress. So in 26/7 also, uh, some inventory in the terms of room will be added. Apart from event exhibition, will recapture, and that also added advantage to build up a top line as well as bottom line, which in last 2 years we have not done more, very low amount of events business, but this year you find good business, even 25/6 also. And this 2 quarter is always event business, so that also added in this third and fourth quarter.
Understood. And sir, just on the, if you can quantify the numbers actually, FY27 we'll be having 1100 odd rooms, say at the beginning of March,
Yeah.
April. Then what sort of occupancy are you looking at for that year? And again,
Yeah. I
on
think
the cost part,
between 50 to 60% occupancy we are looking forward.
50 to 60%. And the upfront
5%
cost
every
for
year
these.
increase.
Okay, okay. And at what occupancy do you foresee, hitting the 30% sort of EBITDA margins?
I think 50%, 55 to 60% we get EBITDA margin of 30%.
Understood, understood. That's it from my side. Good
So
done. Thank you.
every 5% EBITDA margin always increase because of all the rent cost, fixed cost, all the cost is normally recovered. So only the that contributes significant marginal percentage of variable profit.
Okay, thank you for answering that, sir. uh, Miss Rashmi, you can go ahead and ask your questions.
Yeah, happy evening, sir. Sir, I see that Praveg's, price share is almost 58% from its all-time high. Is there any reason for it to be decreasing from last January?
Yes. As you know, the prudent promoter never see toward market. We are not we are working for business. My team is aligned to do business in various segment. We are adding up various segment. We are adding up in each segment the businesses. You can see from 2490 crore business to last year 175 something crore, and this year also again it will added top line and bottom line. The market is reflecting by that own way. When the Ayodhya and Lakshadweep was in hand of as a winner of the bidder of Ayodhya and Lakshadweep. That time, some awareness was highly influenced by the national activity like Ram Mandir inauguration, as well as Lakshadweep visit of our Honorable Prime Minister. That time, Maldives and issue was also concurrently going on. So all this led to the panic in the platform, and that's why I think the price was massively going up. The promoter has no role for the same. So always the action has a reaction. So always overaction is going to overreaction. So same way is happening in the Praveg script also. That is my feeling. Apart from
Okay.
investor analytical as well as investor angle is also uh, n- uh, take care matter, perception and everything is matter in the share market. So you may understand this.
Yes, definitely. From an investor point of view,
So
yeah.
again, one thing I want to tell to my this all the on the value creators this meeting. The promoter stake is not reduced due to sale of the by the promoter. It reduced by the by the way of infusion of capital, by way of preferential allotment to the various investor, and by that way, indirectly, promoter percentage is going to is reduced. So all that perception sometimes misunderstood by the market. And promoter has reduced this promoter stake or like that. So all this is a perception business. So I can't comment on that. This is
Okay.
example.
Yeah, from investor point of view, I do feel that like the Kumbh Mela was an opportunity. I felt like the share price may go up, or the as you mentioned, Ayodhya,
Many things
like
matter.
yeah.
Yeah. So
So
I'm managing my business.
okay, okay.
Mm.
So may I know like a revenue share, like you are into the tent thing. Apart from that, like how is the revenue? What is the major revenue share you get? Is it only from the tents or the event
No,
management,
no,
as
no,
you
no,
mentioned about the
no.
wedding?
A good question. Uh, uh, Event management is actually major. Is was the main business of the Praveg before 2018. Slowly, we have developed 20 from 23 onward hospitality segment. Same way we have captured advertising segment. A big advertising last year we have acquired, that performing very well. This year we get handsome incremental revenue in terms of top line and bottom line in advertising business. Same way hospitality also. Same way you will find exhibition events business, which we have already filed. That big events is already came with the company, and we are keeping eyes on various bidding offers coming into, which is already under my tender division is already have keeping eyes on it. So we are expecting good handsome incremental revenue in exhibition events, because of last year there was very negligible. But when we reach to historical top line of the event exhibition, that may reach to many crores.
Okay. Yeah.
So good thing is yet to come, and I have to, as a prudent investor, I will supposed to I can only tell that you have to give your company some more time to develop all this segment.
Definitely, definitely. That's the reason we look into the company fundamentals.
Yeah.
That's it from my end, sir. Best wishes. Thank you.
Thank you, Rasmi.
Yeah, Miss Maitreya, you can go ahead and ask your questions.
Yeah, hello, am I audible?
Yes.
Yeah, hello, good evening. I have a couple of questions. Firstly, because I'm new to the company, so I need to ask some basic fundamentals. So you explained your revenue sources. One of them is hospitality, second is advertising segment, event management. Those are three revenue verticals that you have, correct?
Correct.
Okay. Now in FY25, as you said, the event and exhibition had quite low
It
revenue
was almost
sources.
negligible.
Almost negligible. Okay. So currently, how many events we have like confirmed orders for? Like they are in the tenders. Could you
The, the,
specify that? And also the
the
value for the same.
this already exchange file 2 3 event business, including Sardar Padyatra. That is more than 10 crore work order. But work order is not always depend upon the value. It's depend upon how actually quantity of the events. So we are expecting manifold revenue only, because we have concluded that event. It was event of 12 days, which we have finished it by around 500 people's team was deployed by the Praveg, and it was a mass scale event. It's may call you call mass media events, which we have concluded. So 3 events we have concluded in third quarter. One was in second fall in first quarter, but last in quarter there was 2 events. Their revenue is, I think, very high.
Okay. And for the full year, how many events? So any events that are planned in quarter four as well?
Maitri, I want to tell you, event business is not a predictable business, number one, because it's always depend
Okay.
upon the which event coming, where, how we bid, how we are becoming one in the events. So,
Correct.
so it's sometime fluctuating. And we have a infrastructure right now. We have already have a huge warehouse, huge event structures and everything, whatever needed. We have good teams
Mhm.
which can carry out these very huge events. Just we have did for anything.
Okay, okay. And any big events that you are like looking forward to that coming up in FY27 as well, that you
You
want
know
to
the
target?
news of Commonwealth or maybe Olympic will come to the Ahmedabad.
Mm-hmm.
So the as a big company of Gujarat or India in the event and where is local business, local company of the Gujarat. So you may understand how much business potential is there.
Okay.
Same way, and the opening remarks I also tell to you also.
Mhm.
We have started one new models for my fellow investor who do not have experience to run the hospitality business. On
Mhm.
their behalf, we will build the hotels, build the resorts, we acquire the land, we develop it, we market it, we do operation and management of that hotels. So that business will also give that contracting business like event 15% to 20% EBITDA margin. So that is the also good
Mhm.
potential. So that may add many
Correct.
more
Mhm.
revenue, not only event, but from that
Correct.
contracting on behalf of my investor
Mhm.
as well as some hospitality, big hospitality company of
Mhm.
India want to do development of our style business, our style resorts. They may give us some business, some development work for their own resorts. In that case, we will have a multifold opportunity to make top line and bottom line very highly
Correct.
improved due to their extraordinary business which we have potential to
Mhm. So
get it.
this is completely
The
this is
companies
sorry to interrupt.
company is already under consideration that kind of
Okay, okay.
proposal.
So this will be a completely new vertical because we're doing hospitality, we're doing advertisement, with also like building the whole EPC thing. So this will be a
Exactly.
completely new vertical from the three that we are currently in, correct?
Because the India's big hospitality companies seen our performance of
Hmm.
the development of resorts of 1 year and 1.5 year or 6 months depend. So they find this good they find good development potential for their own resort, and they
Hmm.
get the good contracting company
Hmm.
who can deliver this.
And this
So
asset will be
they
on their books or our books?
it will be on our books. So far as EPC is concerned, it's a direct turnover, top
Okay, so,
line.
so we are building the resorts, we are managing it, we are
On their
advertising
behalf,
it
exactly, like a
on their behalf.
contracting EPC, like
So
like a
this
events.
will be asset light or not? That is what I'm asking.
It's a, I have nothing to invest in that. I have to raise bill every
Okay,
month,
so
every
we
quarter
asset
for the
light.
development. Simple,
Hmm.
like a
Okay.
event, like a event business.
Like in event business. Okay.
Right, event
And
business.
in event
Once
business,
events is completed, we raise the bill. Same way when we
correct.
part percentage of work completed for the resorts, we will
Hmm.
raise the bills. Same way when finish the resort, that time we get the full payment of the development work. So it's the
Correct.
EPC business,
EPC
and
business. Okay.
that go to top line as well as my overhead of head
Hmm.
office, which is presently very high.
Hmm.
That also absorbed by that activity revenue.
Okay, okay. And event may we have close to 15 to 20% EBITDA margins, correct?
15 to 20, it's depend.
Okay. Okay. And now to the hospitality segment. Sorry. So we currently have 17 to 18 resorts that are managed by us. Are any of these owned by us?
These owned by us. Owned by
See,
us.
these are all owned by
All
us. These
resort
are not
owned
our
by
own.
us, but maybe land is on lease. Structure is by company investment.
So then the asset is not on our books. That is what I am asking.
The asset is book. You can see in the work in progress because we are not still started operation and management. We will start in future.
Sorry, but sorry to keep questioning, but so 17 to 18, we are building these, but these are
Even
owned by these are owned by someone else,
I
right?
have
The
no no
asset unki book mein aayenge.
no.
Okay,
17,
so these are
18 resorts. Out of that, 4 or 5 resort is developed on our own land. We
hmm,
have invested our own capex. Same
hmm,
way, remaining resorts, where is the lease period of 7 years, 5 years to 30 years, 35 years, on which we building capital investment of the resorts, tent
hmm,
city or like that, and that is
hmm.
owned by us.
Okay, so the lease is on the land.
There's on lease land. Exactly, I want to tell you.
Okay, the lease is on the land. The resorts are owned by us.
Yeah.
Okay. And we are planning to have 1150 rooms by the end of FY26. And also in the presentation, you've mentioned the Vision 28 of 2000 rooms.
Yeah,
So this
exactly.
will be just from India, or there are international opportunities also you're looking
In
at?
Africa, Serengeti, inside within the jungle, Masai jungle,
Hmm.
we have already acquired that land, upon which development is soon going to happen.
Okay. And how many beds will be there?
It's 25 rooms, 50 beds.
25.
But
Okay.
but the ARR is 70, 80,000, 90,000 rupees in Serengeti. You may search upon your.
Mm-hmm.
So it's
Correct.
a unique kind of things.
Correct. And this will be on our own land. We bought the land
On lease land for
on
30
lease land.
years, 30, 40 years, 50 years
30,
lease
40.
given. Yeah.
Okay. Good, good. Any other opportunities internationally we are looking at?
It's we are have keeping eyes on it. That is the potential
Uh-huh.
for the resort acquisition in foreign
Mm-hmm.
also, India also.
Mm-hmm.
India's development opportunity for
Correct.
the small HNI investor also inquiries
Mm-hmm.
coming on. They bought the land. They want to develop the resort. We will develop my design team. My developers team will develop the resorts. Then after we
Mm-hmm.
will operate it for longer period, 30, 40 years. So
Correct.
it's we are going to launching that model also.
Model soon. Okay.
Apart from other hospitality companies development.
Correct. Also, this model, are you in talks with anyone? अभी कुछ pipeline में है?
हाँ होता है ना. Always we have already in many things under discussion.
Okay. And this business will also have that event का 15-20% EBITDA margin.
Exactly. You may compare it
Hmm.
like an event business for the
Okay.
EPC business. Okay.
Okay, okay. And so sorry, I'm asking so many questions. In the hospitality, we are just targeting these five-star hotels. So we're targeting the premium crowd, correct?
Yeah, it's always premium because we are charging ARR of starting from 8,000 something to
Mm-hmm.
10, 20,000, 25,000. So it's always like that domain. Okay.
Okay, okay, okay.
It may not
No.
be ranked like 5 star because of
Hmm.
smaller resorts, but it's a boutique resort
हाँ,
where
हाँ.
we are providing 5 star services.
Correct, correct. Lastly, on the guidance for FY26, you mentioned we'll try to close it at 250 crores for FY26. What margins are we targeting this year, and how much business you are expecting from the events in
As
this
you as you
specific year?
know, as you know, this is the full fledged year, first year of a
Hmm.
newly operated resort. So margin
Hmm.
always pressed due to
Hmm.
lower volume of this occupancy as well as some
Hmm.
event exhibition business also compromise. But
Hmm.
you know the huge inventory capital work is done is the progress. So there is around 50 crore of depreciation is coming in the books as well as
Hmm.
rent ROU effect, rent long lease accounting standard. We have to provide the provision of around 10 to 12 crore. So 50
Hmm.
crore is going in this bottom line goes to depreciation and ROU effects. So
Hmm.
net profit is all you find this year some suppress, but
Hmm.
I can assure that the cash flow
Hmm.
is going to coming with the company's books good way, expected way.
Cash flow is very good. Okay, okay. And FY27, once these hotels have thoda longer time to
So
mature, and we've also advertised
many.
them well,
So
what are the margins? Huh?
just I have discussed in many area of the development.
Hmm.
This area like a development for others, development for investor, all these going to come into this 26, 27.
Correct.
So event exhibition, which was almost nil in 25,
Hmm.
25, 6,
Hmm.
some few. When we get a full year of 26, 7 event exhibition
Hmm.
business also, we will recapture. So
Correct.
it's a good potential, I can say, at this
Hmm.
stage. So
Still to guide.
incrementally, you can say from 90 crore to 167 crore to 250 to like that progress you will find in the books of the company.
Okay, nothing, no guidance you can give on the margins.
Margin is, I have already detailed question in this session. I have told about this
Yeah,
advertising
yeah,
margin of
yeah. Good, good.
15%, 25%
Mm-hmm.
advertising,
Mm-hmm.
25 to 30% from hospitality. So all
Mm-hmm.
this margin is going to improve next year, obviously due to old resorts we are
Mm-hmm.
handling.
Okay, okay. And what will split you
Sorry to
expect? How
interrupt.
much? Yeah, yeah. So sorry to take so much time. Yeah, I'll join back in the queue.
Join back. Yeah, ma'am. So participants, I request you to limit your number of questions to two and joining back the queue again. Uh, yeah. So, Mr. Santosh, you can go ahead and ask your questions.
Hello, am I audible?
Yes.
Yes.
Evening. Basically, I would like to understand how are we planning to, fund this growth which we are planning for the next, because our interest coverage is already very low, right? And working capital is also very high. So how will this growth be funded? Any plan to dilute, or what the management is thinking around that? Yeah.
So management is not diluting anything so far as number of sales is concerned. Investment, the capex requirement at present is sufficient. We have already concluded many resorts which was we have on hand. Now we have started event exhibition business. Some working capital may be required. So we have a plan to fund it by various means. We are almost debt free, but the promoters and promoters group has given whenever required the fund to the company. We are managing by that way. Dilution, so far dilution is concerned, we give the preferential investment at appropriate time when we think fit that consideration or the share price is enough, we can dilute at that stage. When management is of the opinion to have optimum pricing, in that case we dilute we raise the funds, and we raise fund will utilize for the growth story of the company.
Okay. So how do you see the working capital going forward, basically?
So we are working capital इतना जरूरी नहीं है, जो जरूरी है वो मैनेज कर लेते हैं, मैं इतना बताता हूँ.
Okay, okay. Yeah, I think that's the question I have. I don't have any other question. Thank you so much for answering.
Yeah.
Ms. Priyanshi, you can go ahead and ask your questions. Priyanshi, ma'am, are you there?
Hello, am I audible?
Ma'am, the voice is too low.
Just wait for a minute.
I am.
Hello, now am I audible?
Ma'am,
Yes.
okay.
Yeah, hello,
I
sir.
am.
For the
Yeah.
question. Yes, sir, I have seen that our fixed assets have been increased sharply from the last 3 years, but it's not reflecting in our revenue. So when do we expect that these investments will start contributing to our top line and bottom line meaningfully?
So, Priyansi, you see in 24 there was 90 crore top line. Then after 170 crore, this year we are expecting just described. So that revenue is already once their capital investment is one is in market. When we open the resort, that revenue come into books.
So, sir, when we can expect that these resorts will get come online?
Already आ गए 17 resorts.
Okay, so is there
The
any
revenue is also coming from 90 to 167 crore last year. This year you expect same growth story. Next year also you expect same growth story from the revenue of from the resorts as well as advertising as well as event exhibition. Just described you in this call.
Okay, understood, sir. And sir, our margins have also been declined drastically. So, what led to this decline? Any particular reason behind this?
Right now, the baby of the Praveg is a hospitality business, while the event exhibition was compromised. I was just told before, so that business cost is also fall in the bottom line, indirect cost of the teams and everything. Same way, the resorts occupancy for the new resort is always starting from 20% to slowly is go to 45, 50, 55, 60. So it takes some time to recover the cost of the resorts. So in the beginning, this bottom line is going to hit by that way all this cost. HO cost is also falling in the books of the company, head office cost, where huge social media teams, marketing team, branding team, development team, exhibition teams, events teams, all that costs fall in the books of the company. And revenue is we have already compromised for event exhibition. Once that event and exhibition business revenue is pouring up in the books, that automatically it contribute indirect cost also of the company. By that way, we find good improvement in the bottom line also.
Got it, sir. Thank you so much.
Yeah, Mr. Sridhar, you can go ahead and ask your questions.
Yeah, thank you for the opportunity. My question is, mostly the Praveg is looking towards the north. Is there any plan to come towards south? Or they feel the territory is,
Yes, yes. Praveg is keeping eyes on Orissa, Andhra Pradesh, as well as some belt of Kerala, as well as you just seen the Lakshadweep. Lakshadweep is a part of South.
true, but it is not considered as a territory of the south. And that you do understand it's belongs
Yeah,
to the south, but it
yeah,
is
yeah.
entirely island. So I'm
Uh,
looking at the way Ayodhya and all, like Tirupati, there are big temples like Rameswaram, all.
yeah, yeah, yeah.
There is a monthly peak season. Are you planning for it, or something?
We have already plans for the south as well as eastern part of India. Presently, we are working on that also. You find some development in that part also.
Thank you.
Sridhar sir, are you there?
Yeah. Thank you.
Okay, okay, okay. Okay, sir. I think we
Anything
have.
else?
I think, sir, we have to conclude the meeting here. We have some time constraints.
Yeah.
So, can we conclude the meeting, sir?
Yes. Thank you, Kirin.
So, thank you, Vishnu Kumar, sir. Thank you, Mukesh, sir, and all the participants who took their valuable time to attend this meeting. Further, if you have any more queries, feel free to reach out to us at
Thank
corporateaccess@kirinadvisors.com.
you.
Thank you.
Thank you all participants. Thank asking and thank.
Thank you.
Thank you.
Thank you, everyone.